218. 216, 227, Exercise 7-1. Oh, these are fun. Okay, identify the journal to record the transactions. Now remember, well, they've given you all the journals. The accounting system of Dave's Wildlife Resort. That's just a great name. All right? If you're in college, that's just a great name, right? Dave's Wildlife, yeah. All right. Their journals are listed below. Indicate the journal in which each of these transactions would be recorded. Okay, here you go. We sold some merchandise on credit. Which journal does it go in? He said sales. Who said? Everyone agrees it's the sales journal, right? Okay. So you've got a credit to sales, a debit to? No. Credit to sales, debit to accounts receivable, and a credit to what? Sales tax payable if there's sales tax on the transaction. 2. Accepted a return of merchandise from a credit customer. We have a return. Does it go in the sales journal? No. Does it go in the purchases journal? No. Does it go?
General journal.
We don't have an option of a sales returns and allowances, so it's got to go in the general journal, right? Okay, that's the other question. When we post something to sales, we have a credit to sales, right? If we do a return, do I just debit this account? Where does it go? Sales returns. Sales returns.
Is that the contra asset?
It's not an asset, it's a contra account. Okay? And they go together. Good? Because we're going to reflect this on the income statement, right? Separately. Good, you guys are doing well. Sold merchandise for cash. Cash receipts journal, bingo. Anybody doubts on that one? Would it go in the sales journal? What are the column headings in the sales journal? Sales credit, sales tax, not sales tax, sales tax, credit, and accounts receivable debit. So if we sold it for cash, where does the cash go? Not in this journal. Okay, so it goes in the cash receipts journal. You had a question?
Yeah, the sales and sales returns don't always come to match, right? Because
No.
allowances. They
Right.
don't have to balance.
So like I have another transaction for $9,000 that doesn't get returned.
Right.
They're not going to match.
But they're still called contra.
Right. I never, ever want this one to be exactly the same as this one. I want this one to be much bigger.
Right.
Okay? Good. Okay. Purchased merchandise on credit. Purchases journal. Good. Gave $400 allowance for damaged merchandise. General journal. So we're going to have a sales returns and allowances again, right? Okay. Collected sums on account from credit customers. Now hang on. Let's think about this. We're collecting money from credit customers. Did I make a sale right now in this transaction? When did the sale happen? Before. Okay? So what we have here is accounts receivable, like you nailed it. So it goes in the which journal? Cash receipts journal. Very good. Received an additional cash investment from the owner. I heard general journal. What's your argument for general journal? Okay. It can go in the cash receipts journal. And should. It's cash, right? There's an other column where you can fill in what it's for on the cash receipts journal, correct? Oh, is that what we're doing tonight?
Yeah.
Okay, we'll do that tonight, but it can go in the cash receipts journal, okay? take that on faith for the next 20 minutes and we'll go over it. All right, last one. Issued a check to pay creditor on account. Cash payments journal. Good. This is for a purchase we made before. It went in the purchases journal before. Now that we're making the payment, it goes in the cash payments journal. Okay? All right. Which one would you like to do next? You want to do them all? Okay. How about you help me with this one then? The transactions below took place at the Big Outdoors, a retail business. There's a keyword, retail business. What comes into play in retail? Sales tax. Excellent. Retail business that sells outdoor clothing and camping equipment. Indicate the numbers of the general ledger accounts that would be debited and credited to record the transaction. This is pretty straightforward, right? Sold merchandise on credit. The transaction involved sales tax. Okay, so we're going to sell something on credit. What accounts are affected is the question. Go ahead. What?
Sales.
No, in the back.
Oh, cash.
Okay,
Tax and sales,
hang on. We sold something on credit.
Oh, I'm sorry.
Okay, so what do we get? We get accounts receivable. Okay, and that was what account number? 111 is the account number. And then we have credit to sales. What account number is that? I'm sorry? 401. And
Sales tax. Payable 231.
payable 231. You told me it was 231. Sales tax payable, right? What?
On exercise 7.2, there's a debit and a credit spot. There isn't 3 spots. So they just want accounts receivable and...
You have me at a huge disadvantage. What are you looking at?
I'm on page 2 days.
I'm on page 219. I don't have a form to fill in? Oh, you're in the handbook.
Yes.
Okay.
I have to use a comma.
Well, description, debit, credit, right?
Right.
So they just want to know what account numbers are affected. It didn't even ask us what's the debit and what's the credit, did it? I'm going a little further with it here. Okay?
It says 2 debits, it has a debit and a credit, so that's where she's at. It just has the
Okay.
credits in.
It just has 2 credits. Good? Are you good? Are we all in and all done?
Because you're not saying that you can only have one debit and one credit. I mean, you can have multiple ones as long as they, I mean, you have to, because there's going to be sales tax. So they just put 2 columns, but you can put multiple numbers in one column.
Right. It's just a matter of how you choose to fill in the form. All right, 3, accepted a return of merchandise from a credit customer. The original sale involved sales tax. What?
About 2 received checks from credit card.
We'll come back to it.
Oh, okay.
I skipped it. I'm not trying to cheat you. We'll come back to it. Okay, accepted a return of merchandise from a credit customer. The original sale involved sales tax. Okay, so the debit is to what?
451 and 231.
451 is which account?
Payable.
Hold it. 451 is which account?
Sales.
Sales returns.
Sales returns. Okay, do we have another debit?
Yes.
What account is that? 231, sales tax, tax payable, debit, debit. Okay, and our credit is to which account?
Accounts receivable, 111.
111, accounts receivable. Good? Okay, 2 debits, 1 credit this time. Good? All right, let's go back and do number 2. Received checks from credit customers on account. So somebody's paying us in payment on their accounts receivable, correct? Okay, what are the 2 accounts that are affected? Okay, what did we get? Cash, and that's our debit. And what account is that? 101. And our credit is to which account? Oh. 111. Good?
Doesn't your sales go up when you receive money too? So,
It depends on what it is. Okay? If I make a sale for cash, the transaction is, let's erase the stuff above here. Let's clarify. Okay. If I make a sale for cash, I get cash, $1,000. Let's say it's $1,000. And I have sales, $1,000. Good? This is, I made a sale for cash. Let's make the same sale, but let's give them terms, accounts receivable. So instead I get accounts receivable, $1,000, sales, $1,000. That's, have I gotten any cash? No. Down here they're giving me the cash. I don't want to record it as sales again because it was recorded as sales here. So what I'm doing is I'm taking accounts receivable and I'm making it go down and I'm making cash go up. Okay? Clear as mud?
Yes, that side stays in balance.
Yes. Do you want to do them as T accounts real quick?
Okay.
Let's do that. Okay, so we've got cash, accounts receivable, sales. All right, so the first thing we're going to do is we're going to make a sale. Sale is a debit or credit. More than one of you should be answering that. Credit, yes. If you've made it this far and you're still struggling with that, we should talk. Okay, my debit is to what? Accounts receivable. Good? Okay, now I'm going to collect the cash. When I get cash, cash is debit or credit? Debit. And my credit is where? Okay, so what's my balance here? $1,000. What's my balance here? 0. My balance here is $1,000. I'm good. This is kind of like a temporary parking spot. In and out. Good? Okay. More questions? Moving on. Sold merchandise for cash. The transaction involved sales tax. Well, here we go. Cash, sales, sales tax payable. Oops. Let's make it balance, okay? Since I can't write. Good? So $1,000 sales, $50 in sales tax. They paid us $1,050. Good? Do we get to keep the sales tax?
No.
No. Okay, as long as we got that. We can try, but they'll find us, yes. Okay, gave an allowance to a credit customer for damaged merchandise. The original sale involved sales tax. Okay, what account gets debited here? Sales what? Returns and allowances. Returns and allowance. Okay? Now, we're giving them a return, so we need a debit to what account? Sales tax payable, right? Sales tax payable also gets a debit. Now, accounts receivable comes into play, but does it get a debit or a credit? Credit. Okay. I'm sorry, accounts receivable gets a credit.
But it was done with cash.
Oh, does it say cash?
Yeah, that's with cash. No, that's the next one. Oh, I'm sorry.
Okay.
Oh, no, never mind.
A credit customer for damaged merchandise. So it's accounts receivable. Okay? If we, on number 6, we give a refund to a customer who returned merchandise but it was paid in cash, the only thing we do is this becomes cash. We give them their cash back, right? That's the only difference. Good? Okay. That's the end of that one. Which one next? None? Yes, no, maybe? What's the first exercise we're supposed to do? Or the first problem we're supposed to do? 7 what? 7.1a. Let's jump to 7.1a. How's that sound?
Sounds good.
Can someone read that for me?
Jack's application is a retail store that sells household appliances. Merchandise sales are subject to an 8% sales tax. The firm's credit sales for July are listed below, along with the general ledger accounts used to record these sales.
Okay.
The balance shown for account receivable is for the beginning of the month.
Okay. Open the general ledger accounts and enter the balance of accounts receivable. Record the transactions in a sales journal. Total, prove, and rule the sales journal. Post the column totals from the sales journal to the proper general ledger accounts. Good? Okay. I'm going to not do the general ledger part of this, right? You guys have done enough general ledger stuff. Let's just do the sales journal, right? And then we can write up the journal entry for the posting that to the general journal and the general ledger. Good? Okay. Otherwise, we'll be here all night. Okay, what are the columns for us?
Just a
Yes.
process questions. Do you always do the journal first and then the sales journal?
I'm not sure I'm clear on the question.
She's asking if you do the general, do you put the entries in general journal first and then do?
The sales all the time?
No, we're skipping the general journal by going straight to the sales journal.
But typically, would you be doing that?
No, the point behind the special journals is that we skip the general journal. Okay? We're totally going to skip it. So I'll emphasize that as we go through these transactions. Sound good?
So you just jump right into
Except they didn't have a sales return allowance.
And we'll deal with that.
They didn't have ledger, so we had to use the general.
Yeah.
Oh, okay.
Okay. See, let's walk through this real quick. Name the 4 special journals. There's a sales journal. There's a purchases. What else is there? Cash receipts. And what else? Cash payments. Then there's the general journal. Okay, so there's 5 of them. How this works in short, simple form is you look at the transaction. Does it go here? No. Does it go here? No. Does it go here? Yes. Stop. You go straight there. Okay? If it goes here, it doesn't go anywhere else. If it doesn't go in any of these 4, you default down here. Okay, so we're skipping this entirely unless we're forced to use it. That's what we're up to. And then we total these so that we're posting one transaction instead of 20, 30, 40, 50. And we're going to post it once straight to the general ledger. All of these post straight to the general ledger. Okay? So when I'm all done, I'm going to post my general ledger or my general journal activities to the general ledger, and my cash payments in total to the general ledger, and my cash receipts to the general ledger, my purchases journal, and my sales journal all individually go straight to the general ledger. Good? There is a summary video of how all these interact on Blackboard go have a look and let me know if you still have questions. Okay? Yes, ma'am.
I was just looking at one of the questions in the book. You didn't necessarily assign it to homework, but it did ask to prepare a section of the income statement. And I'm assuming that these journals are going to change how we prepare an income statement?
No.
No.
By themselves, they do not. Because what you're doing is you're going from, say, your sales journal or your purchases journal, and you're posting to the general ledger. Your general ledger is then used to create your trial balance, and you're creating your financial statements from the trial balance / worksheet.
Well, I guess my question would be, like, with the accumulated depreciation, how that gets worked into the income statement. Would the sales returns act the same way? Would it be sales less returns?
You're going to have presentation differences just because we're learning about some new accounts, like sales returns and allowances. But that's not driven by these.
Okay.
Okay? That's driven by your chart of accounts.
Okay. Are we going to revisit the financial statement?
And the presentation? Absolutely. Good?
Yep.
Yes, ma'am?
Because when you're saying the totals of all these columns, so in the sales journal, let's say, the totals all go in like, 101 or 401, then that gets posted to the general journal.
That's where I want to go with this problem. Good?
Yep.
Okay. Moving right along then. So what we're going to do is they want us to create a sales journal, post these transactions to it if they belong there. If they don't, it goes where? General journal. Good? And then we're going to practice posting the sales journal to the general ledger. Okay? So, help me out here. What are the headers for the sales journal? First up is date. Sales slip number. Description, did you say? What? Customer name. What's next? Post reference. Post reference. Next. I'm sorry?
Account receivable.
Account receivable is a debit. Okay? Next.
Sales tax payable.
Credit. And
Sales credit.
sales credit. Good? Okay. What's the first transaction?
July 1st. Oh, the name financial assets.
What?
Do you want us to read it or just tell you what?
Yeah, no. Read the first transaction.
Sold dishwasher to Perry Martin issued sales slip 501 for 900 plus sales tax of $72.
Okay. What journal does that go in?
Sales.
Sales journal. Why? It's a sale, and it involves and accounts receivable, right? No cash involved. So it fits into the sales journal. So let's fill it out real quick here. The date was
July 1.
July 1. Sales slip number
501.
501. Customer name.
Perry Martin.
Okay. Posting reference, nothing for now. Accounts receivable. How much? What did we sell him? Let's start with the sale. What did we sell him? $900 worth of stuff. So we've got a credit to sales for $900. How much is the sales tax? $72. How much is our accounts receivable then? $972. Good? Is that in balance? Okay. We're clear then, right? Do I post this to the general journal? No. We're skipping it by going here to the sales journal. Okay? The only other thing we need to do is we need to post this to Perry Martin's accounts receivable balance, correct? And when we do, we put a check mark there.
And you do that right away. You don't do.
You do it every day. Okay? Transaction 2. Sold a washer to Cindy Han. Issued sales slip 502 for $21.75 plus sales tax of $174. What was the date? 6th. Sales slip was 502. I remember that. Cindy H-A-N. Okay. And how much was it? Sales tax is $174. And the sale was $21.75. Somebody do the math for me. It's
$23.49.
$23.49. Credits add up to be my debit. Life is good. I'll go find her accounts receivable card, post that to it. Yes? Everybody's happy. Questions? Go right ahead.
Okay, you're saying you put that to the accounts receivable card for that specific person, but you aren't doing your accounts receivable per client?
I'm doing it somewhere else. Okay?
No, I know, on your
Hang on.
journal.
On my journal.
I'm just saying, okay, you're putting that to their customer card, but are you also putting that entry in your accounts receivable ledger?
Yes.
Every single?
Not every day. No.
Okay.
No. It's only going to the customer card for now.
Okay.
And then when we get done with this and we total it, then it goes to accounts receivable account 111.
That was my question.
Got it. Okay?
But it does go to the subsidiary ledger.
So I was just going to put them up here. So we've got Perry. So this is accounts receivable. So he would owe us $972. Then we've got Cindy. And she would owe us $23.49. So there's their subsidiary ledger, right? Their individual customer card. Because I think old school. Good? All right. 11.
July 11th.
Sold a high-definition television set to Richard somebody Slocum. Issued sales slip 503 for $2,350 plus sales tax of $188. Okay? So, on the 11th, 503, Richard something, right? I'm not spelling all that out. How much did we sell it for? Sales $23.50. Sales tax is $188. Total of $25.38. I'm in balance, right? Richard needs to have a card. We would post the receivable $25.38. Notice it would look different, right? Because there's a format for this. I'm just shortcutting it. And once we do that, we can check it off. Good? Okay. 17th, sold an electric dryer to Mary Schneider. Issued sales slip 504, $1,025 plus sales tax of $82. 17th, 504, Mary. How much did we sell it to her for? Sales tax, 82. Total of 1107. Mary needs a card. 1107. Once I post it there, I'm going to check it off. Good? Okay. Everybody's pretty clear on this right now, right? All right. I'm going to shortcut a little bit. The 23rd, same thing. The 27th, same thing. The 29th, same thing. The 31st, same thing, right? Everybody's good with that. Okay, so let's assume we recorded those. We're going to shortcut them a little bit, unless somebody wants to do a specific one. No? All right, so what do I do next? End of the month, total these things up. Now here's where we're going to need somebody with a calculator. Yes?
I just had a question on formatting on this. Do you date this entry, the 31st, and then do totals in the description?
Assuming we had all the other entries down here, and we got to the 31st and we're totaling, all the way through the 31st, I date it the 31st when we do it.
Okay.
Okay? Anybody have time there to do some of the math for us?
10,962. Oh, wait. That's for the...
I don't care. Give me the totals. Yeah, just give me the totals.
I just have to one
The AR is 10,962.
Okay,
Tax is 812
812.
and 10,150.
Okay, does that balance? My two credits equal my debit, right? Equals plus. Good? Okay. So now what we do is we're going to go post this to the general ledger. We're going to skip the general journal, and we're going to write the general ledger entry for this. Our debit is to which account? AR, correct? I'm just going to write it in general journal format, even though we're going to skip it and go to the general ledger. Let's not confuse anybody. Let's go straight to the general ledger with it. Yeah. Because I'm going to mess you down. Okay. General ledger is way over here. We need three accounts. We need accounts receivable. I'm going to cheat and do it in T format, though. We need sales tax payable, ST payable. And we need sales. So our debit to accounts receivable is 10962. Our credit to sales tax payable is 812. Sales tax sales credit is 10150. Okay? And we would get this would be your sales journal, page 1, right? So we'd have S1 is our reference, S1 is our reference, S1 is our reference. Good. What's our posting reference over here? Right underneath your total, so the accounts receivable general ledger account number is 111. Sales tax payable 231. Sales 401. And this tells me, this is your post reference, I posted these to the general ledger. S1 tells you where that came from. All of these have been posted to the individual customer card for accounts receivable, right? The subsidiary ledger for accounts receivable. So we've got references here, references here. Are we done? Somebody say yes. Okay. You're wrong. No, you're right. So that's everything. We totally skipped the general journal. You guys see how that worked? So we posted these as we went to their individual customer cards, and we posted the totals at the end of the month to the general ledger. Everybody good? All of these special journals behave basically the same way. The headers are really all that's going to change. You'll end up with different accounts out here that you're posting to. Okay? Is everybody good with this? Questions before I move on?
And then one question at the end that says, what percentage of credit sales were for entertainment items? Can you go through how you figure out percentages of, they ask you different questions.
Okay.
The percentage, and, so on and so.
Well, here's where you stop and you go through and you go. Because do we keep track of that anywhere? No. But the first one's a dishwasher, so that's out.
No, I know, and I'll tell you the numbers, 3,825.
No. I'm just trying to walk through how I would do it.
Okay.
That's all. The second one's a washer. The third one's a high-definition TV. So I'd come over here with a different color, and I'd go, okay, this one's 1. The fourth one is an electric dryer, and then we skipped it from there. So of the total, I would take this one and say, this as a percentage of the total is what my sales for entertainment items was. It was entertainment, right? Okay. But this isn't part of your normal record keeping. Notice we didn't do that as we were doing the accounting part of it. Okay? Good? Puzzled? Ask me.
Well, I haven't obviously taken a math class in a long time, but I don't know if everybody knows how to figure out percentages from those totals. So you take that, cut it out, and divide it to
It's 2,350.
We also have a television set that was sold. So you
Yeah, it's
can add
actually
that.
But that's one of the problems that we didn't put up here, right?
Yeah.
Okay. So it would get added to your 2,350.
Yeah.
So it's, how much is the television?
75.
Yeah, this as a percentage of the total. So you take the smaller one, you divide it by the total, and you get a percentage. It'll be less than 100%. If you get greater than 100%, that's a good key that you have a problem. You did it backwards, just in case. Okay. Good? Yes, ma'am.
Do you have a trick for trying to remember all of the different journals and all of the different headings? Because they're all different.
Yeah, you want to know what the trick is?
Memorize.
What? No. Okay, I'm up here in front of you, so I've got to remember them all, right? No, I don't. What is the first thing I do? Okay, everybody tell me what the headers are. You guys did it for me, didn't you? So on a test, I'm going to give them to you. In the real world, you know where to go look them up. Okay? But on a test, I'm going to give you the headers. I'm not going to make it that hard on you. But you are going to need to, know generally what goes on a sales journal. You know it's got to be accounts receivable, sales, and maybe sales tax. Let's think purchases journal. Okay? You're going to have a purchases. You're going to have an accounts payable. What else might you have? Freight in. What else? Invoice number, terms. I mean, you can kind of walk through and figure them out because you know what activity is going to happen. Okay? Cash receipts journal, cash, accounts receivable, other. Give yourself plenty of room for other, and you could cover just about anything. Okay? Since it's cash receipts, you're going to need a posting reference because you're going to affect customers' accounts receivable. Okay? So you can figure it out without actually memorizing them. In a test situation, you just got to relax, though, and give yourself that 30 seconds to go, okay, now let me think. What goes here? Okay, I'm good. And you'll be fine. Okay? Other Chapter 7 questions?
Maybe we have an example about I have a note in here about this little square with the online the number account and the name of
The general journal posting reference and then the customer card.
Oh, okay. Yes. The general journal posting reference. Let's do a hypothetical. Good? Let's just kind of dovetail off of the end of this. Let's make an assumption that we have a customer who's going to return something. Good? Here. This guy here, Perry, is going to bring this back. He's going to return this sucker. Okay? How do we do a return? Does it go in the sales journal?
No.
No. Let's go over and write the journal entry for it, okay? It's going to go in the general journal. So, what account do we debit?
Sales return and allowance.
Sales returns and allowances. For how much? $900. We also need a debit to sales tax payable for $72. Okay, and we need a credit to AR for $972.
You also need the subsidiary.
We do.
Yeah.
Okay, we've just written this in the general journal. Good. Now we have to post it to the general ledger. When we do that, we have to put in the post reference. I didn't leave myself a lot of room. So the account number for sales returns and allowances is what? Does it tell what?
451.
451. 451. We post it there. We come and we put the post reference in. Sales tax payable is 231, correct? Okay, so we post it to general ledger. We come back, we put the posting reference in. Accounts receivable. We go post the credit to accounts receivable, account 111, I think it is. Right? Okay. Then we go over to Perry's account, his individual accounts receivable subsidiary account, post the credit there. When we come back over here, we put a slash and a check mark.
So you put an account receivable there, slash and his name.
That would not go in your posting reference.
No, where it says accounts receivable?
Yeah, like in the description,
in
you'd
the
say, you
description.
would say accounts receivable / Perry Martin.
Yeah.
Yes.
Okay,
Yeah, you'd put that in. Okay? Yes, thank you very much. All right, other questions? What else would you like to know about Chapter 7? Okay, moving right along. How many of you have done Chapter 8 homework? Who has questions on Chapter 8 homework? All right, what page? Which problem? Now, these are going to behave very similar to what we just did. It's just going to be a different journal. Okay?
Go over with 8.2, I just want to make sure I have
Exercise 8.2?
my, yeah, make sure I did it.
No problem.
Can I ask one more question about chapter 7?
Yes, please do.
In exercise 7.8, it was, we transferred the sales tax payable out of the sales account.
What page are you on real quick so I can go look?
That would be page
220? Exercise 7.8. The balances of certain accounts of Jenny Corporation on April 30th, 2013 were as follows. Sales of $220,000. Is that a debit or credit? Credit. Sales returns and allowances is $330,000. Is that a debit or a credit? Debit, right? Okay. The firm's net sales are subject to a 6% sales tax. Prepare the general journal entry to record payment of the sales tax payable. Okay? So it wants to know a couple of things. What's the sales tax? Well, first we have sales of 300,000, is it? 220,000, sorry. $220,000. We have returns. Here's where the 3,000 comes into play. Correct? So we have net sales of 217. Okay? What's our sales tax rate? 6%. Somebody with a calculator, what's 6% of 217? 13,020?
Yeah,
13,200 or 13,020? I have two different numbers. I challenge someone to calculate it again. 020. We're challenging your number. Do you want to check it? 020. Okay. That's the number challenge game. So it wants us to do what? Write the journal entry to record the payment
At the end of the month.
of the sales tax. So here's the amount that's going to be in our sales tax payable account, because we recorded that as we went through up here. Okay, we just had to calculate it though, because they're kind of testing us to see if we did this. So when we pay it, our liability is going to go up or down? Down, so it's a debit. Sales tax payable. Okay, what am I giving up to make this liability go away? Cash. There's your entry.
So cash is the credit.
Correct.
Okay, I was thinking of something else that they did at the end of the month when they had to pay their sales tax, but the entry for that.
But you're good now.
Yes.
Okay. Long as we're good. Okay, so we're moving on to Chapter 8, unless there are other questions. Nope. So back over to page 253. Somebody wanted to see exercise 8.2, correct? Yes? Okay, the following transactions took place at Serene Trails Hike and Bike Shop. Indicate the general ledger account numbers that would be debited and credited to record each transaction. Okay, it gives you the general ledger accounts. A small chart of accounts. Okay, 1, purchase merchandise for $1,500. What account do we debit? Cash? What did I get? I got cash?
Yep, purchases.
I debit purchases, right?
Yep.
So I have purchases, $1,500. And what did I give up? How did I pay for this?
Yep.
Accounts what? Payable. Remember, now we owe this to someone else. We're not making a sale where they owe us. We owe this to someone else. Good? Okay. Is there sales tax involved in this?
No,
Why?
it's a purchase. We purchase from the wholesaler.
We're going to retail it now, correct?
Yes.
So we don't have to pay sales tax on it, but the end user, the guy who buys it that's going to ride the bike, is the one who's going to have to pay the sales tax. Good? Okay. Returned damaged merchandise to a supplier and received a credit for $300. Okay, what account do we debit? We're going to debit purchase returns?
Account payable.
Accounts payable, right? We don't owe this guy the money anymore. A debit for $300. What account are we going to credit? Purchase, returns, and allowances. Got the bug. Okay, so debits to accounts payable. Our accounts payable goes down in value. Our purchase returns goes up. Notice, purchases is a debit balance account. Purchase returns is a credit balance account. These are what type of accounts? Contra accounts. Yes? Good? So they go together. Cool? 3, issued a check for $800 to a supplier as payment on account. Okay, what account gets debited? Accounts payable. Was it $800? Okay. Excuse me, what?
So,
Do you have the different book? Do you have the older book?
No. I'm trying to remember the amount. It says $800, yes. I have 13th edition. Issued a check for $800 to a supplier as payment on account, page 254. Okay. So, $800, my accounts payable, my liability goes down. What did I give up to pay this off? Cash is my credit. $800. Okay, there's your entry for that. 4, purchased merchandise for $2,400 plus a freight charge of $260. Okay, so I purchased merchandise. Debit purchases for how much? $2,400. And I have freight in for $260. Accounts payable is my credit then for $2,660. Everybody follow that one? Questions, answers? Okay. Are we good with these? Specific one you want to do, or can I skip one?
do the next one. I'm just starting to grasp it.
Received an allowance for merchandise that was damaged but can be sold at a reduced price. Okay? So we bought something, but it's not perfect, but we're going to still sell it. They're going to give us a discount. Okay? So they're going to give us a discount of $400. Where does that go? My debit is to accounts payable. My accounts payable is going to go down. And my credit is to? Purchase returns and allowances. Okay? Next question. Okay. Purchased merchandise for $4,200 in cash. We're going to debit which account? Purchases. And we're going to credit what? Okay. This top one, does it go in the purchases journal? Yes. This one, this return, does it go in the purchases journal? No. This one where we paid cash, does it go in the purchases journal? Who says yes? Cash receipts. Did I get cash? Does not go in the cash receipts journal. We did not receive cash. Who says it should go in the purchases journal? Raise your hand. Defend yourself.
Are we talking about this?
This one here, purchased $4,200 worth of merchandise, paid cash. It goes in the purchases journal. The question is why?
Because all acquisitions of merchandise go in the purchases journal.
Okay, what are the headers for the purchases journal? Let's change this. Okay, here's our purchases journal. Date, invoice number, terms, vendor name, post reference, purchases debit, accounts payable, credit, and freight in debit, right? I put those two next to each other, but I did them out of order. Still works. Okay. Where does cash go in my purchases journal? I could, but does it really belong there? No, because if it's cash, it goes in which journal? Okay, you said cash and stopped. Everyone else said cash receipts. Is my cash going up or down when I credit it? Down. Bingo, there it is. Say it louder.
Cash payment.
Cash payments journal. Okay? Cash is going down. I'm making a payment. It goes in the cash payments journal. Okay? Good? Now, one could argue that if I did a return and I got cash back instead of accounts payable, that could go perhaps in the cash receipts journal.
We haven't covered either of those.
Okay, well, we're going to tonight.
The only reason
We're headed
why
there
I'm
tonight.
upstairs.
But you got it.
She loves it,
Well, it's a question from chapter 8, right? Here we are in chapter 8. Okay. So questions on this. Cash, payments journal, general journal, purchases journal. Good? Okay. Other questions?
Bribery, I don't want to do
Trying to keep her in the game here. What was your question? 8.6. Okay. Would you be so kind as to read it while I erase?
Says on June 30th, the general ledger of Fashion Brand Clothing Store showed a balance of $52,995 in the purchases account, a balance of $28.25 in the straight-in account, and a balance of $51.20 in purchases, returns, and allowances account. What was the delivered? Yeah, it is.
Okay. Purchase returns.
Right. What was the delivered cost of the purchases made during June? What was the net delivered cost?
Okay. Purchases. What was the second one?
Rating.
Okay. Purchases $52,995. Freight in $2,825. Purchase returns $2,120. Correct? 5,120. I apologize. I was trying to keep up. Okay. Good. Okay. So what do they want to know? Net delivered cost. Okay. So we start with purchases. 52,995. Add freight in of 2,825. Right? Less purchase returns of 5,120. Gives me 50,700 net delivered cost of purchases. Correct? Questions? So it's what did I buy? Add the freight that it cost to get it here. Subtract whatever I returned. Whatever discounts I got, and you get, here's what all my purchases cost me for the month. Good? Good. What's the next question you guys want to ask me?
I would love if you would go over exercise 8.7, because I wasn't really sure how to exactly answer the question. It's one thing to put it on the journals and the ledger, but actually have to sit there and write out halves. Like how to explain how to do it?
Okay. The following errors were made in recording transactions in posting from the purchases journal. How are these errors detected? So it hasn't asked us to actually correct them.
No, right. But
Okay? So where would we find these boo-boos?
Right.
Okay. A credit of $2,000 to Brock Furniture Company account in the accounts payable ledger, right? This is the accounts payable subsidiary ledger, was posted as $200. So remember we had accounts receivables over here? Let's repurpose one of these for a moment. If it's accounts payable, it was Brock. It was $2,000. But we didn't post it as 2,000. We posted it as 200. How am I going to find out that I made this mistake? Schedule of accounts payable. At the end of the month, I'm going to do a schedule of all my accounts payable accounts, total it up, and match it against your general ledger control account, account 111, right? Accounts payable. And they're not going to match. And you're going to have to go back and find out why. And you're going to check all these, and you're going to find out that you missed it. Now, there's another way we could find out. It would happen after that, after we did the schedule of accounts payable. What if, what if we got lazy and we didn't do a schedule of accounts payable this month? How would we find this? The trial balance would still match because accounts payable, it was posted correctly there.
When we get the payment.
When we make the payment, these guys are going to call us up. As soon as this thing becomes late, they're going to call us up and say, hey, you sent us a $200 payment on this $2,000 invoice. What's up? And you're going to go, but I don't owe you any money. And they're going to send you a copy of it, and you're going to look and go, 200, look at the invoice, 2,000. You're going to figure it out. They're not going to let you forget. Okay? So there's a couple of ways. All right, which one's next?
So the accounts payable column total of the purchase journal was understated by 200. I just need to know how you figure these things out.
Hang on, I want to find out.
B.
The accounts payable column total of the purchase journal was understated by $200. Okay, this is easy. This is our purchases journal, right? Date, invoice, vendor, post reference, purchases, accounts payable, freight in. Okay? Let's assume that we did totals, and this one is, which one is understated? Accounts payable, okay. So I've got 10,000 here. Freight in was 500, and we record my credit as 10,300. Okay. How do I know if I'm off? It's not in balance, right? So you have this issue where your two debits do not equal the credit. You got a problem. So go retotal it, figure out where you made your math boo-boo, and go on. Okay? C, an invoice for $1,680 for merchandise from Jackson Company was recorded as having been received from Baxton Company, another supplier. Okay, how do I figure this one out? Okay, who said general journal? How would I know about the general journal?
How would you know about it?
How
else would you
does,
record the error?
well, no. How would I find the error is the question. So this doesn't go in the general journal. This goes in the purchases journal. Purchases journal straight to the general ledger, right? It also goes to the accounts payable subsidiary ledger, and they're all recorded for the correct amount, but the name is recorded wrong. It's recorded as Baxton instead of Jackson.
Won't match the invoice.
Okay, how are you going to find that though? Do you go back and audit all the invoices a second time? Okay, I think you're misunderstanding though. The piece of paper comes in, and we go up here and we record it, and we just write in the other name, and we file the piece of paper. So the piece of paper is gone. It's recorded here. It's recorded in the posting reference to Baxton's accounts payable. Where do we figure this out? What?
No, you're not going to know until they call you to say you screwed up.
There's the high five. Okay?
You don't want to get it that far.
No, it's going to go that far. It is going to go that far. And here's the bummer on this. Okay? Jackson is going to call you up and say, yo, look, you're a deadbeat. When are you going to pay me? Okay? Baxton is going to take your check and cash it and not say a word. All right? So at that point, you've got to pay Jackson and go call Baxton up and say, hey, by the way, I overpaid my account. Send me the money back.
There's no other way to figure it out that you've made an error or something like that.
I mean, you could somehow maybe, but what double check do you have once you record it to the wrong one? That's going to...
Jumped on that one.
Yeah. They're going to call you up and they're going to want to get paid. That's how you're going to find it.
And then if you just, if you had a $500 payment, the next one.
Let's do the next one. A $500 payment to Baxton Company was debited to Jackson Company. So Jackson, the balance on Jackson's account is going to show lower than what it really is, so you're going to underpay them and they'll call you up and tell you. That's what's going to happen. Okay? Good? All right. Which problems did we have to do, and which one do you guys want to tackle? Everybody gets quiet. Okay, who did the homework for this? Do you want to save it?
Do 8.1A.
8.1.
Start at the beginning, yeah.
It's always best to start at the beginning. How many of you have not done your homework for Chapter 8? All right, we're going to stop. We're not going to do 8.1A. We'll do it next time.
That's not what I did.
But we're going to class next time.
Yeah. I'm at liberty to do whatever I want.
It's the only one I had time.
No. You know what we're going to do? Because I'm going to give you Chapter 9 tonight, then we're going to have a test a week from Monday after you've had a week off. The gist I'm getting is it's not going to go well. So we're going to move the test back a week. Okay? So I'm going to let you pick, instead of taking the test, what's behind curtain number 2, I'm going to let you take what's in the box. Okay? So the test will get moved back a week, so it's not 2 weeks from tonight. Good? Just because of the feel I'm getting, because you guys are...
They didn't do what they were supposed to do.
What?
It's supposed to be on the 25th.
Okay. Remember we had this conversation?
Yeah,